Hello, everyone. I'm Dave Keller here at StockCharts.com. Today, we have a special guest host for you. Tom Bowley of Earnings Beats is going to be joining us. He's a longtime Stock Charts contributor, really knows the charts. He'll be talking you through the update on the markets and what charts to be watching. Ladies and gentlemen, this is the final bar.
Good afternoon, everybody. This is Tom Bowley coming to you live here on the final bar. Just want to mention I'm the chief market strategist at earningsbeats.com and absolutely love coming on here to work with Dave Keller and the Stock Charts crew. Had a very interesting day today. We had the Fed meeting, the start of the Fed meeting today, and we're going to get the culmination of this meeting tomorrow. And thought we'd go through some charts, see how the market did today. So let's get to that market recap. Starting with the Dow Jones, you can see the Dow Jones Industrial Average finished up 26 points. S&P 500 was up 13. NASDAQ up 113 points. Midcap, the S&P 400 Midcap Index was up 5.25 points. The S&P 600 Small Cap Index down just slightly, less than 1 point. And the transports continue to see a little profit taking. They were down about 16 points. But on a percentage basis, certainly the NASDAQ 100 was the winner today, rising about 0.75%. So we're seeing a little bit of that rotation back into the NASDAQ, but we do have a couple of big earnings reports that will be coming up here momentarily this afternoon. So we've got Microsoft reporting this afternoon. We have Alphabet or Google also reporting, Texas Instruments in that semiconductor space. So if you think about it, the three key areas that have been leading the market in 2023, one is software. We've got Microsoft reporting. Another, internet. We've got Alphabet reporting. And then throw in the semiconductors with Texas Instruments. And it's kind of easy to see how things could get very interesting based on how the reactions come in from those earnings reports. Moving on to the sectors, you can see today was a strong day for materials, up about 1.8%. Technology up 1.14%. Energy up a little more than 0.5%. And then if we dig a little deeper within the materials group, you'll see that the aluminum index was up 5.51%. That was a huge move. And if you notice, this group has been lagging, has been moving lower throughout the last several months, trying to turn back around to the upside. If you look at this chart on the DJUSAL, you'll see right at about the 128 to 130 area, that's been a critical resistance. Trying to get back through that level has been difficult. If aluminum can have another day or two, like we saw today, maybe, just maybe, we'll get that breakout there. Semiconductors, I mentioned them already. We do have Texas Instruments reporting momentarily, but based on today's action, nothing wrong with the semiconductors, up about 1.9%. I do still worry a little bit on this chart. You can see the higher prices on the semiconductors, but check out that PPO, which is much, much lower. So far, we've been holding that 20-day EMA. If that were to fail, and who knows, with earnings, maybe tomorrow will be a rough day. We've got the Fed announcement coming up at 2 p.m. I would really watch the 20-day EMA, because if we lose it with the negative divergence that's in place, we could see selling accelerate. That would be one thing to watch as we go forward. We've got the diversified industrials also having a very strong day today. It's been this group's been moving up now for the last couple of months, powering the industrials higher. The DJUSID today up 2.6%. So these were three of the industry groups that helped dictate today's market action, which was mostly positive. Taking a look at the 10-year Treasury yield, of course, again, Fed reports tomorrow coming out with their announcement. Everybody's expecting a 25 basis point hike. But what do they say? What they do, I think that's a foregone conclusion. I do believe everyone's expecting that 25 basis point hike. But it's always a little bit of a mystery what the Fed and Fed Chief Powell might have to say tomorrow afternoon. Watch for that. The volatility after a Fed meeting can be crazy, both to the upside and downside. Many, many head fakes a lot of times after that 2 o'clock announcement. So tomorrow will be really interesting for sure. But today, 10-year Treasury yield up 5 basis points to 3.91%, clearing a little bit of short-term overhead resistance, and also now trading well above the 20-day moving average and also above that 50-day moving average. So we've kind of got that uptrend going. If you look at the PPO over the last 2.5 months, the 10-year Treasury yield has continued to show a PPO that is in positive territory. So in other words, we still have momentum to the upside. One thing I when I look at this chart that still, makes me feel pretty good about things is that the long-term 10-year Treasury yield topped back in October of last year, and we have not seen it go higher. So while the short-term Fed funds rate has been raised via the Fed, we haven't really seen that movement higher in the 10-year Treasury yield at this point, which tells me that the bond market, is not really overly concerned with inflation. And that's something that the Fed keeps reiterating, that, hey, we want to make sure that we've got inflation completely under control before we stop hiking rates. The bond market's already saying it's under control, but we'll wait for the Fed to decide on their own that they're done. Maybe they give us some wording tomorrow. That will be something certainly to watch and to keep in mind. Now, one thing I like to do when I'm looking at a recap is I like to pull up, I have a relative strength chart list where I have all the sectors. So not only, can we just go over based on the pure, what did materials do today, up 5%, but what this ends up doing is showing us materials, and I'll get an update because this was probably done just before the market closed. But let's pull up the percentages. This is telling us how much materials outperformed the S&P 500 for the day. So I like to just rank it in order so I can see materials, technology, energy, communication services right down the line. It gives me not only the percentage, but if I want to, I can go back and take a look, say, over the last week or over the last month, and quickly identify the groups that have been leading, not just today, but in this case, over the past week. Energy, utilities, healthcare, consumer staples, materials, real estate, financials. And I'm looking at this and I'm thinking, where in the heck are our 3 aggressive groups? Technology, communication services, consumer discretionary on the bottom. The interesting part about this, if you go back a week ago, that's when we actually had our Max Payne webinar at Earnings Beats, where we talk about areas of the market that could be impacted by the fact that we had a major run up in the market and we had a lot of net in the money call premium. So these were the 3 groups that had the biggest moves prior to option expiration, and those 3 obviously taking it on the chin over the last week. Let's move it back another period. Let's go back to a month. And again, you've got energy, financials, real estate, materials, industrials. It's not until you get to the second half. So what we've seen is not just a great rally in 2023, but it's now morphed into what I consider to be a very bullish rotation. Picking up, you remember, wasn't that long ago, everybody was talking about breadth and the fact that breadth was not very good and that we needed to see other areas of the market pick up. For me, it was just a matter of time. I expected that. That's the way bull markets run. We tend to see early leadership from areas like technology. They make a run, and then we'll see some of that rotation into some of the other areas. So I think overall, the market's been doing well. We've gotten some of this rotation. I believe it won't be long. We'll see money rotating back heavily toward technology, toward consumer discretionary communication services. But this is a chart, again, that if we're looking at a market recap, not just for today, but going back for the last few weeks to a month, this gives us a little bit better insight as to what's taken place. Finally, one other thing I'd like to show you is the relative strength of industry groups. So that was the 11 sectors that I showed you. Here are the 104 industry groups sorted by today's action. Again, I'll give an update here just to make sure I have the latest. Aluminum, the best performer. In fact, the way I set this up, you can kind of see I have them numbered 001 through 011, 1 through 11. That's the sectors. So 011 is XLB. So you always see XLB coming after the 011. And then I break down the industry groups for the XLB by number as well. So each one of these has their own number. And one way you can look at this is if I sort it by name and I scroll down, because we know materials did well, right? Look at these are the 9 industry groups within materials, and check out the move in materials. It was across the board. Aluminum, yes, had a great day, but non-ferrous metals also had a great day. Steel had a great day. Containers and packaging, a great day. So there was a lot of strength in that materials area. And you look at some of the other areas, look where all the red is centered. You had a lot of areas, a lot of defensive groups did not perform well. So consumer staples, real estate, a lot of red in those areas. Healthcare, a lot of red. How about financials? Red. Industrials. These were all areas that were lagging today, and you can see it broken down by industry group, which I think is pretty cool. If we move all the way up here to the technology group, you can see technology. I think it was the second best performer, I believe. Let me go back and look at that. Yeah, it was the second best performing group. And so when we look at this and break it down by industry group, you can see semiconductors had a very strong day. Also, software had a strong day, but we do have those earnings reports coming in. Anyhow, I thought today was a pretty good day. We did have a little bit of rotation back towards the aggressive areas. Not, I wouldn't say full throttle, but we got a little bit of movement back in that area. And now I think it's really up to the earnings. But that's what I have for you for today's market recap.
Hey, thanks so much for that market update. Couple quick comments before we continue today's show. First off, we welcome your questions. I'm going to be back soon, and I would love to answer your question in our next mailbag segment. You can reach us via email, thefinalbar@stockcharts.com. On Twitter, just tag us in a comment @FinalBarSCTV. And on our YouTube channel, just drop a comment below the video that you're watching. We'd love to hear from you, especially your feedback on the show, but definitely your questions. We'd love to answer your question live on the air in our next mailbag segment. Also, we have a pretty serious special happening right now at StockCharts.com. If you have never been a premium paid member of StockCharts, now is the time to do it. We have a flash sale going on in the month of July. You can go to StockCharts.com/special. Some of the most powerful features of the StockCharts platform are reserved for our paid members. Things like our scanning engine, which allows you to identify stocks and ETFs on the move. Our chart list feature, which really allows you to capture the names and the charts that are most important to you, and our ACP platform, our advanced charting solutions, which really is a dynamic way of understanding market dynamics. You can go to StockCharts.com/special for all the information on that summer sale happening in the month of July. And now back to your guest host, Tom Bowley.
All right, now let's move on and take a look at, I want to look at some of the earnings reports that are expected out this afternoon. And I wanted to start with one that I'll show you in particular that I really like. I use relative strength a lot to make earnings calls before the earnings come out. And one stock that I really like, and it's hard to tell whether or not we'll get a positive or negative market reaction, because it could be a situation where you've got a run up, stock looks really good, it's a buy on rumor, and then a sell on the news kind of scenario. So strong relative strength doesn't always mean strong market reaction, but it usually means strong report. And so I thought I would pull up first the MANH. This is Manhattan Associates. I wanted to pull up this chart because you can see the AD line's been strong, price action's been strong. And if you look at Manhattan Associates relative to software at the end of the quarter, and remember, right now we're in a quiet period. Once the quarter ends, there's no Wall Street discussing with management anything. We're in a quiet period. So since the end of June, we have not really, or Wall Street's not been able to contact and talk to management. But if you look at the end of June, when the quarter ended, we ended with Manhattan Associates sitting at a 52-week relative high to the software index. And if you go down below, you'll see software has been one of the best areas of the market going back since the beginning of the year. In fact, if I go back to that relative strength for industry groups, let's pull the period up year to date. And when you look at year to date and we put it in percentage change order, autos, semiconductors, we come down here, out of the 104 groups, software is in the 9th group, outperforming the S&P 500 by 21.76%. So here's just a quick analysis as to what's been working throughout 2023. So we know software has been a strong group, but when you have a leader within that group, that tends to be a pretty bullish signal. Now, again, I think the numbers are going to come in strong. Whether or not the market reacts positively, I don't know. And I don't know if this company has reported yet, but I thought we'd spend some time perhaps looking at some of these earnings reactions and after hours, if in fact there have been any. So let's first start with Manhattan. Well, we are up almost $10 in after hours. So this is a really strong stock relatively going into its earnings. And you can see a really nice reaction on MANH. Now, before I pull up some others, because I know you're probably sitting there wondering, well, what about Microsoft? What about Google? Well, I'm thinking the same thing. But let me just show you what their chart looked like before we go into their earnings. Because Microsoft has had a big year. But again, remember, it's in a very strong group, software. So there's your Microsoft move. And here's Microsoft relative to software. We actually topped back in May, and we've been trending lower for the last 2.5 months. I don't know if that's a precursor. Maybe something's not going to be just great with this report, but that makes me a little bit more nervous when I see that relative strength line that's been going down for 2.5 months. So let's see if Microsoft has reported and what, well, down $6, down 1.8%. So again, that one was one that did not look great. It didn't look horrible, but it didn't look great. And the initial reaction so far is a drop in those in Microsoft share price. So let's try one more here. This is going to be Alphabet. I want to show you the chart first, because look at the relative weakness of Google for the past almost year. Yes, it's been going higher, and sometimes you look at the chart and maybe you don't see the entire picture, because Alphabet looks great on this chart, right? I mean, it's trending higher. It pulls back to the 50. It starts bouncing. We've got higher lows, higher highs. AD line still sitting up here near the high. What's not to like? Well, what's not to like is that internet stocks, and again, if we go into that industry group and look for internet, this is the 5th best performing group in 2023. So the group has been great. So has Google been leading the group, or has the group been leading Google? And I would say from this chart, the primary reason that Google's going up is because internet's on fire. Internet is dragging Google along. When I look at this chart, I can see that Google is not a very good relative performer within the group. Google is not leading this charge. Instead, it's been trailing. Will that matter when they report earnings? Well, let's see if they've reported earnings, because again, I have not looked at this. Google is up. So maybe they came out with better than expected numbers. Maybe actually right now we're trading above the recent highs. So that's actually a pretty decent move on Google this afternoon. And we'll see whether or not that continues. I want to do one more of these with you, and that would be Texas Instruments. Because Texas Instruments, if we look at it on its chart, another one, it just recently broke out. That's good news on the absolute chart. But on the relative chart, here's another one that has really been lifted by a strong semiconductor group. It is not, this stock, Texas Instruments, has not been a strong performer on its own. So let me pull this one up, and let's see if we have any news here. Down $5. So mostly what I've shown you is relative strength, and I haven't seen the reports. What I really use relative strength for is determining whether or not a company is going to report good numbers or bad numbers. Are they going to beat Wall Street estimates? Are they going to come up short? I've done studies, and actually I just did one for this quarter. I just projected all of the key earnings reports of this week, or at least the ones that looked either bullish or bearish to me. I went over with Earnings Beats members just a couple nights. Well, actually, it was last night. Yeah, today's Tuesday. So it was last night. I went through almost 200 companies, including these that I just showed you, talking about ones that I thought, earnings reports I thought would be good this week, and those that would maybe not be so good. And Google, Alphabet was one I did not like at all. Manhattan was one I loved going in. And you can see the difference between some of these reactions. Now, I'm guessing that the numbers came in strong on Manhattan and probably on, maybe on Google because it's up higher. But there may have been something that the market didn't like with Texas Instruments and Microsoft, and I'll be checking that out later. But what we do is I put together an upcoming earnings chart list. Actually, I have an associate, Matt Townsend, that works with me, and he does this work, does a fabulous job. And so when we have earnings reports, what we end up doing is putting together a chart list for all of the earnings reports that will be coming out with a market cap of at least $1 billion. And we put them in a chart list and we number them. So these are the companies that are reporting this afternoon. We number them in order of their market cap. So Microsoft is obviously the big one. We got Visa reporting, Chubb, Canadian National Rail, Waste Management, Snap. There's that Manhattan Associates that we pulled up. There are a lot of these different stocks. Teladoc will be interesting because Teladoc has just been horrible on a relative basis. But anyway, we go from 00001 all the way to 0049. So there are 49 companies reporting this afternoon above that $1 billion market cap threshold. And then also included in this list are companies that are going to be reporting tomorrow morning. Because when we get to the market open at 9:30 tomorrow, it's going to be the culmination of both earnings this afternoon and also earnings tomorrow morning. So this is one chart list where I can pull up tomorrow morning. As soon as the market opens, I can pull this chart list up and sort to find which companies got the best market reactions and which ones got the worst market reactions, and be able to go through and potentially come up with some trades that way. So anyhow, I thought this is a great way throughout earnings season, rather than go through, and in this case, we had 49 companies reporting this afternoon, and then tomorrow from 1,001 to 1,065, there are another 65 companies, plus the 49 today. That's 114 companies. So if you wanted to go and look at how they're reacting, you'd have to pull up each chart individually at 9:30. That's 115 companies, 115 charts. Here, they're all in one chart list, which is a great feature here at Stock Charts. And by the way, Stock Charts still has that special going where you can take advantage of lower prices. You better take advantage of that now while you can, before the prices are increased. So that's basically what I had today. I do want to invite everyone to go over to earningsbeats.com if you're not already on our free newsletter. We have an Earnings Beats Digest newsletter. All it takes a name, email address, hit that subscribe button, completely free, no credit card required. You can unsubscribe at any time. We would love to have you. If you'd like to try our service, we have a no-cost trial, 30 days. You do have to give a credit card for that, but you won't be charged unless you want to extend that membership. Anyhow, it's been such a pleasure joining today. Dave Keller does such a great job with the final bar. It's a pleasure to come on, maybe give you a little bit different take the way I look at the market. But again, always a pleasure. So hope everybody has a great evening. Enjoy this market. Hopefully tomorrow the Fed maybe shines a little positive light on us. Who knows? But we'll have to wait and see on that. Have a great evening, everybody. Happy trading.